Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. Almost, but not quite, a key reversal down on Friday. The day nevertheless ended up as an impressive bearish engulfing pattern, if only just, that negated the previous 3 days pattern of a 3-day bullish morning doji star pattern. It was also the first proper close below the middle time, currently 113.11, of the January to May bearish Andrews pitchfork. Now this pitchfork has run, and continues to run, the whole of 2021's action, and drops by about 5 ticks a day. Additionally, prices pierced but did not close below the interesting neckline of the April to May reverse head and shoulders bottom, currently at 112.70, closing right on the 61.8% Fibonacci of the March 2020 to January 2021 move at 112.89. Finally, just a reminder that all this comes in the shadow of September's monthly key reversal down. Now so far today, a move lower right from the start, but seemingly having difficulties in pushing below the neckline of the reverse head and shoulders bottom further down. We have another neckline currently at 112.20 from the big old July 2017 to November 2018 head and shoulders top. Below this, well, we have some congestion from June 2020 in the 111.67 area. It is too early to look at last week's action as a hesitation area, but I may be minded to do so soon. Cable, aka sterling against the US dollar. A bearish engulfing pattern on Friday. Not the hardest of patterns to construct given the previous session was an indecisive spinning top. However, it has raised the question as to whether the last 3 days action could be a possible 3-day bearish evening star pattern, especially given that it was all started last Wednesday by a key reversal up. Anyway, the combination of the September 2020 high at 134.83 and especially the 2019 high at 135.16 seems to have capped late last week's action. Overall, we are still in between the middle time below, currently at 132.10, and the upper time above, currently 135.55, of the early September to late October bearish Andrews pitchfork. We're also still quite a way below the broken July to date sideways triangle, for which we have and had targets down here. The initial target X in the 134.90 area has already been achieved, wow, twice, whilst the secondary target X1 in the 132.65 area, well, that looks a long way out of reach at the moment. I'm now thinking of retiring these two targets as the market seems to have done enough, even if target X1 has not been achieved. I'm considering this now. Now, a couple of final points. I've droned on internally about the longer term whole of the 2021 double top pattern, and that's an Adam and Eve type. I thought it was becoming more obscure as time moved on and prices didn't. However, the late September to early October move down and the last 3 weeks action revitalized this idea, enough that I'd mention again the targets I had originally placed below. Initial target X2 in the 133.60 area and a secondary target X3 in a 131.10 area. 2 Fridays ago we saw target X2, the initial target of its pattern, reached. As you can imagine, target X3, the secondary target, is so much harder to reach, and also considering about that one. So far today, a small move lower, though still within last Friday's main range. Euro sterling. An immediate countering combined bearish double, bearish harami, and possible 3-day bearish stick sandwich pattern. That's all on Friday. The top side was capped once again by some recent congestion between 84.20 and 84.30. Meanwhile, below we have the new-ish lower trend line, currently at 83.85, of the reincarnated June to date expanding broadening wedge pattern. As I've said recently, I've had doubts about this whole idea right now, and this was a good test of this wedge pattern. A little below this trend line we have another support line, one that proved to be quite good back in October. Is the old upper channel line from the broken bear channel originating from May. That's currently at 83.71. So far today, a lower open and a dip below the newish lower trend line, but not by much. The market has pulled back up over it again, though not by much as well. I'm still watching this market to see if we will have more of a follow-on lower to this last 3 days as a 3-day bearish stick sandwich pattern. The stick sandwich patterns are interesting because tradition suggests they are bullish reversal patterns. However, the data is different. It indicates something like 6 to 7 times out of 10 the market is a bearish continuation pattern. So it will be interesting to see if the market, when it finally moves, follows tradition or the data. US dollar against the Indian Rupee. A bullish opening white Mariposa on Friday, though for a second I thought it might have been a bullish belt hold, but I'm not comfortable with the positioning of the pattern, though the pattern itself is good enough. The most interesting feature was twofold. Firstly, it was how prices closed back up over the raft of resistances that earlier last week had been supports, namely the well-publicized quartet combination of the short-medium moving average, currently at 74.40, the 50% Fibonacci line of the February to April 2020 move at 74.26, the medium moving average, currently at 74.29, and that's been 74.29 now for 3 days. And finally, the broken downtrend and trendline combination of the April 2021 to date move, currently at 74.26. This quartet of supports had previously been seen late 3 weeks ago, trying to hold the market up and failing. Then again, they failed last week, but the resurgence on Friday mitigated this move lower. Perhaps most interesting of all was how the high of Friday pierced a significant 4-pointer downtrend from October, currently at 74.39, though prices did not manage to close over it. Further up, we now have the 50% Fibonacci line of the April 2020 to February 2021 move at 74.63, moving into the frame. So far today, a dip down to the quartet of supports once again, but an immediate rejection and move back up through the broken October to date downtrend, and now contemplating the resistance overhead at 74.63, that seems to have gotten stuck actually at the moment, ran up that downtrend, a broken downtrend. US dollar against the Brazilian real. A fifth bullish white soldier on Friday. That was also an unusual key reversal up, and a possible hanging man pattern as well. Now the key reversal up was unusual as it came immediately after a bullish white soldier. And a hanging man pattern has its own set of psychosis. You see, traditionally a hanging man pattern is seen as a bearish reversal pattern. However, the data indicates that it performs as a bullish continuation pattern something like 6 out of 10 times. So I'm interested to see whether the market follows tradition or the data. Overall, prices are still in between the middle tie, currently at 550.95, and the upper tie above, currently at 570.28, of the late July to late August bullish shift pitchfork. This pitchfork, though broken, continues to provide a reasonable indicator of the current bullish angle of attack. However, I've also drawn a more acute late August to early October bullish Andrews pitchfork that is based on the recent action. Currently, the market is in between the lower tie, which is currently at 545.68, and the middle tie, currently 570.07. Now, I am curious if this new bullish Andrews pitchfork may provide, with its more acute angle, a higher rate of climb. Finally, below the market, well, some distance down, we have the rising medium moving average, currently at 534.72, which may, as soon as the middle of this week, possibly make a golden cross with the long moving average, currently 536.51. Just please remember this, as I've recently repeated many times. All this is in the shadow of the weekly key reversal down from 3 weeks ago. US dollar against the Mexican Peso. A second bullish white soldier on Friday, and a reasonable follow-on higher to the previous session's immediate countering key reversal up and bullish engulfing pattern. However, the top of the market was once again capped by the interesting 38.2% Fibonacci line of the big 2018 to 2020 move at 20.90.39. This Fibonacci level had capped the recent rise much as it had done in early November and early October. Now, stepping back for a bit, the action since late September to date has elements of a diamond pattern, but it just isn't that well defined to call it such. This requires some more thinking and pondering. Anyway, we still have, at least for the moment, on the top side targets for the recent broken June to September descending triangle. Primary target X, which is in the 20.89.20 area, has already been achieved, though there still seems limited and possibly diminishing chances of success of achieving the secondary target X1 in the 21.23.5 area. All these recent actions should be seen in the shadow of the weekly key reversal up made 4 weeks ago. Now, so far today, higher open with a slow but seemingly concerted attempt up to the lesser Fibonacci line at 20.9039, though as yet not managing to reach it, though awfully close. Thank you for listening. This short version broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. Here comes the final bit.